Hey guys, welcome back to another video. Today, I'm going to talk about why I've never really used a traditional bank and why even though I'm young, I have always stuck to a Fidelity Cash Management Account and just my Fidelity brokerage instead of having for example, a Chase bank account. And I really do think everyone should watch this video because this can save/earn you, no joke, millions of dollars throughout your lifetime. If you're earning less than 4% on your savings, if you're tired of these crazy account fees for, your bank basically offering you nothing besides insurance up to $250,000, or maybe you just want a smarter place to keep your money, this is the video for you. Fidelity has great interest rates through money market funds. They have automatic money managers for you, and they have an absolutely phenomenal ATM debit card. So first things first, Fidelity's cash management account is not actually a bank account. Even though it functions like a bank account, it's actually a brokerage account, which is actually very beneficial for you. You get all the features that you would with a normal checking account and then some. Of course, you get direct deposit, you could pay bills online, you can order checks, you can get a great, like I said, debit card, and best of all, there are no fees or minimums. So all those things make it really great as a checking account alternative, but on top of that, you're getting the best interest rates and access to invest in the market if you want to. With most big brick and mortar banks, savings rates are still just abysmal. The national average is just about 0.4%. With Fidelity's default option, your money automatically goes into their government money market fund, which the ticker is SPAX. I'll put it up on the screen. As of now, SPAX pays 3.9 to 5% depending on rates. That's about 10 times as much as you would get with a traditional bank. And the best part of it all is that it is completely automatic. You don't even have to move money in manually, right? As soon as you deposit it, Fidelity will sweep it straight into SPAX. And then when you need to spend it, you can, of course, just use your debit card and Fidelity will instantly convert it to cash and not SPAX. So basically, Fidelity has you covered throughout the whole entire process and you never even have to look at your Fidelity account if you didn't want to, right? Of course, you should still check it for security reasons to make sure everything still looks good on that end. But in terms of making sure your interest is being paid out and that you have it in the correct fund, you really don't even have to do that because they do it for you. Now, one thing people might say is money market funds aren't FDIC insured, which of course, when you put your money into a bank like Chase, your money is. So is it really safe? The thing is, Fidelity accounts are protected by SIPC, which is the Securities Investor Protector Corporation. This covers up to $500,000 in your brokerage account, including $250,000 in cash, which is basically the FDIC match. Also, if you look at what SPAX holds, it's almost all US treasuries and government securities, which is backed by the US government. Now, if you rather have FDIC insurance for whatever reason, Fidelity also offers a program bank option. Your cash is spread across multiple FDIC insured partner banks, which takes your coverage all the way up to $5 million. Personally, I wouldn't go this route because it does pay a little bit less interest, being in the 2 to 3% range, but for whatever reason, if you need that $5 million in FDIC insurance, then that is another option for you, and it is still miles better than what traditional banks will offer you. The next thing we're going to talk about is the debit or ATM card. This is honestly one of the best debit cards you'll find anywhere. Fidelity reimburses all ATM fees worldwide with no limits. In comparison, most banks either charge you per withdrawal or only waive fees at their own ATMs. With Fidelity, you can use any machine anywhere in the world and they'll reimburse you within a few days. If you're someone who travels a lot, this feature alone can save you thousands of dollars. You won't have to waste time hunting down in-network ATMs or paying ridiculous exchange fees at airports or currency exchanges. You literally just withdraw your money and Fidelity will have you covered. Another really great thing about Fidelity is automation. They offer a feature called recurring activity, where you can set up automatic investments into stocks or ETFs on a monthly, daily, weekly, whatever basis. Let's say you want to put $1,000 into the S&P 500 every 2 weeks when you get paid. You can have Fidelity do this automatically and you just wouldn't ever have to think about it. This is great if you're someone who gets a little bit worried about the market fluctuations and just looking at steep drops in your account and not knowing when to buy and sell. This really takes that all out of the equation because you never have to think about that. You can also automate transfers, bill payments, and even bank wires. It has account and routing numbers, so setting up direct deposit is just like any other bank. And once again, absolutely no fees. No monthly maintenance fee, no minimum balance, nothing. That being said, there still are valid reasons to have a traditional bank account. Now, I like to sign up for bank account bonuses and churn them, which you can learn more about on my site at bankbounty.io, or look through some of my other videos. I can dive a little bit into that in a few seconds. But even besides that, there are benefits to having a traditional bank account. The first and major thing is that, you can't go to a Fidelity branch and deposit cash, right? You need to have some middleman, I guess, to go ahead and get that money sent to you. Of course, if you only had direct deposit, that wouldn't really be an issue, but assuming you will get cash payment sometimes, or you just have cash sitting in savings somewhere and you want to deposit it, you would have to go ahead and hit up Chase Bank first, or whatever bank you have, and move it from Chase to Fidelity. But yeah, as I was saying earlier, I do highly recommend having other banks open because you can get some very good easy sign-up bonuses to make an additional few $1,000s every year if you want to. Once again, you can go ahead, check out my site, bankbounty.io, if you want to learn more about that. One example of a very simple offer you can do is Chime, where all you have to do is deposit $200 and you'll get paid $200 within one business day usually. So you can go ahead, deposit $200, get $200 in profit, take that money, and then close the account if you wanted to, right? At that point, it's pretty much up to you. But other than that, Fidelity really does have you covered on all ends. Leaving your money sitting in a bank account is not going to get you that future generational wealth, unfortunately, but investing will. Even if it's just in, of course, treasuries, which is a bit lower than what the S&P 500 will yield, it is still a step in the right direction, and of course doesn't have the volatility that the S&P 500 does. Anyway, I hope this video was helpful to you. If you want to learn more about the account, go ahead, leave some comments down below in the description, or go ahead and email us at the Bank Bounty email. If you want to learn more about Bank Bounty, go ahead and drop a comment about that, or watch another one of the videos on the channel. And yeah, that's about it. I hope you guys have a great day.